Josh, you there, man? Oh, looks like you might have some sound issues.
There we go. Are we back?
Hey, Josh, what's up, buddy?
Good, good. I think Discord was just tweaking a little bit when we started it, but happy to get everything all situated. Hello to everybody. I know that I was saying some hellos. I don't know if anybody heard me, but Jason, Storm, Jesse, what's going on? Bobby, hello, hello. Neon Ninja, what's going on? Time. How you doing, Kira?
I'm good. I'm good. Thanks for having me. I didn't hear you, so I was like, either you have a
Yeah,
mic problem or I'm like, maybe something else is happening. So, all
no, yeah,
good.
it was the same way. I guess I was talking to myself because I saw you muted originally, and I'm like, all right, I can't really hear you. You might be muted on Discord, and then you couldn't hear me. So, that's fine.
All good, man. All
It's a
good.
little bit of a phone tag, you know? How was your week
Um,
so
yeah, it's been. I had a good weekend. Uh, just lots of family stuff. Pool party. So that's always good, just to get off the charts. I think it's very healthy to have that separation and time management. And just, coming back this week, just, you know, trying to focus on a checklist, you know what I mean? Like really focusing and trying to limit mistakes or breaking rules. Like today I broke rules. And of course, when you break rules, you get stop losses. So that's one of my biggest like things I'm trying to do, especially this week. Like my main focus is just sticking to the criteria and the rules. So yeah, how about yourself?
good, good. Last week was a pretty good trading week. This week on Monday, I mean, man, that price action, I was looking at it in the PM session. It was so slow.
Yeah.
Admittedly should have really gotten off the charts way earlier, and I didn't, and I basically took some losses because of it. And like one of the key rules I gotta just really tell myself and recognize, and in hindsight, it's always very obvious, but when you see price action just very slow grinding, high resistance, like it's not worth it to trade that. Like we want to say it is, but it's not. It's really not. It just burns so much mental energy where it just kind of just leaves you like tired. Like you should never really be tired looking at the charts because then you're just going to be fatigued in your decision making skills. And I caught myself victim of that yesterday. And I'm human. A lot of people think that just because we come on stage and everything that we have superpowers and we're superhuman, but that's obviously not the case. Yesterday, I definitely took some losses and I overtraded and overstayed my welcome. So, it's like when I recognize that period of just slow, high resistance grinding, like there's a bunch of other things to do. You could even just go outside, even just work out or, stretch or do something else that's more productive for your health than just burning mental capital for 30-point ranges. It's not worth it. So, and I'm talking about NQ specifically. So I'm sure that other people traded other assets yesterday, but that's kind of what it is.
Yeah, and everyone's got a different style of trading. Some people, um, they might be trading on the 5 minute time frame, and it's like there's a small window of opportunity, and once that window is closed, there goes the opportunity, right? And you pack it up, you journal, and you show up and do the same thing the next day, right? So, but self-realization is a huge thing, and it leads to the conversation I wanted to have today, actually, which is about losing streaks and bouncing back, because it was something I was facing. So I thought it would be a pretty cool thing to touch upon today, because I'm sure everybody has their fair share of losing streaks. Like no one is invincible to that, right, or immune to that. So
Absolutely agree with that. Very, very important. It's the one thing also I just immediately can reflect on too. It's like the amount of like mental energy that I spent yesterday just inside of like a very small range. Like I mean, I kind of just took my piece of the pie, from today, and I was like, damn, that was really refreshing. Like just to be like done like much sooner, much quicker, and I just like don't have a thought of like either just going back in or not. Because like after a longer day of a lot of let's call it mental fatigue, like you do realize like your own sanity afterwards, right? And it's like I think that period of self reflection is very important, and it's the same thing with like athletes too, like or anybody that does anything on a very professional level, right? Like if you don't have the best of days, and you're able just to find your own routine and just get back in the swing of things. Like you don't have to go back to the plate and start looking for home runs. Like it's just not, that's not healthy. And it's just very important for other people to hear that, right? Like after a longer day or a day that, you either overstayed your welcome or took a little bit larger losses than your risk management permitted, like you should never be going back the next day and just looking to either risk more or try to recuperate exactly what you lost. Like that's not a good mentality, and it'll definitely force you to be into different situations where you don't want to be. So it's just recognizing what you do want and what you don't want, and positioning yourself in the ability to make the right choices, because everything in trading, again, it's a decision, it's a choice, it's your job and or your reason to click your own button, right? So if you don't have that, mental fortitude, then that's still going to cloud your judgment. And if you have clouded judgment, I'm sure that most people in the audience can be honest with themselves to know that they felt that in the past. And, just having that days in a row is surely not helpful, and it's not conducive to proper progression. So that's just the breath of fresh air as it relates to me, my trading, and how I also view the markets.
Honesty is the best policy in this whole business. So Time's mentioning, love the transparency here so far. I mean, that's, if we're not going to be honest with ourselves, then you're never going to like move forward or move ahead or remain profitable or stay profitable. You're always going to take steps backwards, even though you might take a couple forward, right? So honesty with yourself is huge, huge, huge. So
I always say it all the time. It's like at the end of the day, especially in trading, because like it's a solo sport, right? Like what are you gonna do? You're gonna end up lying, and then like you lie to yourself, and then like that's just gonna delay everything even more. So like there's no reason to lie to yourself ever in price action. I say this all the time, even reading price action. I talked about this. There's also inspiration from FX for a living that we've had these discussions, but it's like you can quote unquote impose your will on the market, or you could just read the freaking candlesticks and say like, okay, well, what is order flow telling me? What is my model telling me? And it's like, if you're gonna say that, oh, I want this to happen, or I'm predicting this to happen, or I know this is gonna happen, then you're doing the very well opposite of saying, well, this is what's actually happening or occurring. So that concept of lying to yourself or actually not being honest with yourself goes further than just speaking about results. Like it's also about how you interpret what is the data that you see in front of you, right? Because if you're just telling yourself that I believe this or I think this, right? That's a lot different than just saying what is actually occurring. And like the things that are occurring, again, they're just going to occur. They're outside your control. Nobody in here has the funds to move a market. So your job is just to basically look at the market and say, okay, what is happening, and can I position myself in a way that makes sense for what I'm looking at? So the transparency is not only to yourself, but it's also what you see and how you interpret that. So I would definitely want to add that.
so yeah, let me know when I can begin the deck, and I'll
Yep.
proceed.
Let's just get a one in the chat from everybody so that we can see Kira's screen. Looks like there's a couple ones. If anybody is having any sound difficulties or troubles viewing the screen, then it's very likely you. So, just restart or refresh your Discord, and hopefully all should be well with that. So without, further ado, I just want to give a special shout out to everybody that's here, our moderators, scouters, developers, affiliates, all the people that also support us. We appreciate you guys, and stage is yours, my brother. Appreciate it.
Thanks, Josh, and once again, thanks for having me. So yeah, my name is Traderxkira. I think this is now the third stream I've done with 2 degrees, and the last two I thought went really well. So today's the third one, and I feel like every time I try to come onto these streams, I want to talk about some real shit. I don't want to like I don't want to just you know show obvious things, or just show things that most people talk about perhaps, and there's nothing wrong with that. It's just I want to do something a little bit different. So I always try to put a deck together for everybody. I just want people to know like how serious I take this, how passionate I am about it, and so like I hope you're taking notes if you can. And if you have questions, feel free to drop them in the chat. Engagement's obviously amazing. And like we're all in this together. We're all like here to learn. We're all here to grow. Nobody's perfect. And we got to be like cool with ourselves, right? Like we can't be too hard on ourselves. So with that being said, here's the agenda for today. We're going to be talking about losing streaks. We're going to be talking about how to bounce back. And then we'll get into more of the technical stuff. Like I can walk people through like how I'm trading. And of course, I always love talking about Bitcoin. And I have Q&A at the back end, but I guess we kind of do Q&A throughout. So it's all good. So yeah, let's start. So first off, like handling a losing streak. Now I was in a losing streak just recently, and I was making a lot of just bad decisions, FOMO a bit, panic, just not following my checklist. It just seemed like I had a bad read on everything. So what's up, Abhishek? So when we're dealing with like a losing streak, we gotta like understand that every trade is a lesson, and that losses are the tuition fees of trading success. So I've got I got about three things here to talk about in terms of the losing streak. So the first part is reality. The reality of the situation is that every trader is going to experience a losing streak, right? If you see people who have a 100% winning streak, or 100% win rate, I don't know if that's how real that is, because I don't know any like successful traders that I'm following that are at 100% win rate. So the reality is like everybody is taking losses. Second part is recognition. We got to recognize, what's happening without judging ourselves. It's very easy in this business because it is a lonely business. It's a you versus you business to, just get really hard on ourselves and get mad at ourselves and upset, and then that can lead to a lot of like bad decisions down the road. And protection, reducing position size. Like the whole point is like staying in the game, right? Your risk management. When you start to get into these types of streaks, you gotta like be able to scale back a bit until you kind of can figure things out again, and then start to get back to where you were, right? So like if you're taking, like let's say you're taking $300 position size trades, and you start noticing you're in a losing streak, you might want to drop it down, right? Maybe by 50%, just until you start to like put the pieces back together and feel more like yourself. Then go back to your normal size position, right? So I said 300, so 50% of that is 150, not 100. But you catch my drift. So reality. Let's talk about reality. So when it comes to reality, universal experience. Every trader, from the pros to the beginners or amateurs, like everybody is going to experience this at some point, and it's not just going to be once. Like you're going to experience this more than once. We have to remember it's not about your skill, right? A streak isn't, or streak doesn't automatically mean you suck or like you lost your edge. The market moves in like cycles, right? And with Trump coming in and tweeting and things like there's so many weird variables that can mess up your trade that have nothing to do with like your skill or the edge. Probability in action. Trading is about probabilities, as we know, right? Not certainties. So like building an edge, right, and putting criteria together, to form your trading system, all that does is increase your probability in the setup. It doesn't make it perfect. It doesn't make it a sure thing, right? There's no certainty. But by having that trading system in place, it gives you the edge. That's why they call it an edge, right? But you have to remember, like, even though some wins can like cluster together, so can losses. And there's a difference in our mindset when we have wins that are stringing together, right? We start experiencing euphoria. We think we're invincible. We think we're the shit. We start taking pictures. We start sharing our P&L. Like there's a whole bunch of stuff that's like a trap, right? Which gets to the next part. But losses can also cluster together too. And it does like the opposite with your headspace, right? You don't feel euphoric anymore. You feel panicked, right? You're not sharing your pictures anymore because maybe you're embarrassed. Maybe you're you're lying to yourself about things, like as if it's not happening. So the psychological trap is, losing streaks will trigger self-doubt. They can cause overtrading. Definitely will make you want to break your rules. And when you start to put all that together, what that does is it just continues to make that streak worse and worse and worse until you come back to reality. So in terms of a perspective, we need to kind of shift our mindset into asking ourselves, like, instead of saying, like, why is this happening to me? We have to be proactive. Just like this is a business. In a business, if something's going wrong, the entrepreneur doesn't like plead to God and say, why me? They start to inspect and try to ask questions as to, like, what am I doing wrong and what can I do better, right? How do I respond to this? So in trading, we got to do the same thing. And there's various things that we can do. So recognition, once again, acknowledging that there's a streak and not judging ourselves for it, right? So awareness is definitely more than being in denial, right? That's what we want. We want to be aware. Many traders ignore or downplay losing streaks until the damage is too large. So recognition will help to stop that bleeding early, right? We got to have that self-realization. So if you start to see emotional signs, like these are red flags: frustration, forcing trades, revenge trading, having urges that break rules. Like I said, these are signals that, or flags that you might be going down a path that's not aligned with your, with your higher self, in terms of like when you're trading properly, and when, maybe you are securing more wins than losses, right? Like when things are on check. A data check. Look at your last like 5 to 10 trades. This is, one of the most important things with trading is like journaling, which we'll talk about in a sec. But like, you got to review what you're doing. If you don't review with what you're doing, then you have no idea like where you are right now and where you're probably headed in the future. If you start noticing that you're making a lot of mistakes, for instance, right? Like you're breaking rules, like then you can see you're deviating from your plan, right? Your performance is deviating from what is normal for you when you are winning. So take a look at your, last handful of trades and see how you're doing. In this space, we see with social media that, there's a lot of, I don't know, I don't want to say drama, but, there's a lot of interesting stuff going on social media, right? And the thing with like our ego is, with trading, everything, I mean, coming even from the crypto space, like everybody's trying to aim for that sniper entry and they're trying to hold all the way to the top. And if anyone takes profits, I find people always kind of rip on you for taking profits. And it's like, well, why'd you sell? You sold too early. And it's like, dude, you're up like 150%. Like, it's okay to take profits, right? Like, it's all good. So detaching our ego, right? Like the losing streak isn't a personal failure. It's a market variance or a temporary misalignment. It has nothing to do with who you are as a person. It has nothing to do with your skill set. Chances are, if you're profitable month over month and you get into a losing streak, well, you've been profitable month over month, right? It has nothing to do with your skill. We need to also, take control of the wheel, control that narrative. So instead of, saying to ourselves, I'm a shit trader or I suck or whatever, you got to try to reframe that. A lot of this, a lot of our success is going to start from our mind. Like we have to like convince ourselves that, it's not about you being a bad trader, that you're just in a rough patch, right? It's just something to work through, right? And that you are in control and that you are an amazing trader. You've proven it to yourself already, right? And if you're still working through it, well, then that's a different story, right? Like you're building the blocks still, but it doesn't mean you're not a good trader. It just means you're in a different, part of the journey, so to speak. Protection, right? Reducing position size, staying in the game. Risk management, that's what we were talking about earlier, right? When you start to put these pieces together now, you got to ask yourself, like, okay, well, how can I like proactively or, action change? So one of the key things to do is just reduce your position size. A lot of times, I see people double up their position all of a sudden. And it's like, if you're making bad decisions, the last thing you want to do is double up your size or take, more trades than you normally would. So trade a little smaller, right? Get your rhythm back in alignment, and then you're there to, live to see another day, because the market's not going anywhere. And we constantly want to chase profits, and look at our P&L, and with like, depending on where you trade, there's so many days you need to have like wins and to get a payout. And instead of looking at it from that perspective, just look at it from a perspective of, did I follow the rules of my checklist, and did I do everything aligned with my system? Next time. And once again, I do believe this is being recorded. Thanks, White Chocolate. Shout out to him. So yeah, stick to rules. Don't widen your stops. Don't double down. Have discipline. Preserve your capital, especially when you're emotionally shaky. Avoid revenge trading. I mean, these things sound simple, but when you're actually in the thick of it, this is like, it's really hard to think of these things, that they're actually like really happening to you. And I went through some of this like last week or two. Like it's a real thing. So revenge trading, right? Like the urge to make back a loss quickly. And so like if you took a trade and you risked $300 and you come up short, and then now you think there's another setup, and you're thinking, well, I'm going to risk, instead of risking $300 to make that back, and then I would have a +1, maybe I'll risk, $600. That way, if I win, I get back to 2R. Like, you see what I'm saying? Like, this can lead to a massive, massive loss and a massive blow. So don't revenge trade. Just take it easy, slow down. Fewer higher quality trades are better than like the rapid fire style decision making, and especially when you're like in the red, like emotionally, and you're like feeling that stress. You have to like remind yourself to just like chill out and slow down. Your mental energy, like we were talking about in the last slide, like about protecting your mindset, protecting your thoughts, projecting, positive like mantras to yourself, right? It's not that you're a bad trader. It's you're an amazing trader. You should be telling yourself this every day. You're an amazing trader. You're a profitable trader. Even if it's not like actually in front of you tangibly happening, like you still have to tell yourself these things. Like if you look at some of the best, sports figures on the planet, whether it's in MMA, whether it's in hockey, baseball, football, like you find me one athlete that said that they suck. Like when they were starting out, none of them are going to do that. And when you look at the champions of champions, these are the guys or the people that, were like always digging deep and persevering and always thinking that they are going to be the best or that they are the best. And of course, like it takes reps and a lot of training and practice, right? We can transfer that type of metaphor into trading, of course, right? By, it could be backtesting, journaling, meditation, whatever you want to call it, right? Like whatever it is, it's still, the variable is still very much aligned, and it starts with our mind. So we have to really protect our mental energy. We have to be able to like step away from that screen, right? I talked about at the start of our live stream today, Josh and I were just talking about like how the weekend went, and it's like I took time away completely from the charts to just enjoy time with my family, go like take a swim in the pool, like had nothing to do with charts. And sometimes, it's easier said than done. There's weekends where like I am on the charts still, and I'm testing, I'm studying, and there's nothing wrong with that. You still have to understand when you have the mental capacity or the energy to do that and when you don't. So if you don't have that mental energy there and you're trying to now force backtesting sessions or studying sessions, like that's a recipe for disaster. Take a step back, touch some grass, recharge yourself. And, also we got to remember the goal of why we're doing this, right? Besides the personal goals of changing our lives or changing our families' lives, or retiring parents or paying bills. As a trader in the most technical capacity, it's about survival.
All right. I'm glad it was identified earlier.
All right, can we hear me now?
Yeah. Not really quite sure what happened, but we're back. We're back.
Too much sauce. You guys are funny. I appreciate that. It's kind of on a roll. All right, let's go back to where we were. And okay, so everybody can see everything. Let's try this again.
Yeah. Appreciate it.
All right, respect that. So yeah, once again, remember the goal. Remember why you're doing this. And on the most technical plane of existence here is survival. You need to survive. Okay. Now, the next part is about bouncing back. So once we've identified what's happening, there's self-realization, you're starting to protect yourself. What steps can you take for the comeback, right? The comeback is always greater than the setback, and every single champion has setbacks. Nobody's perfect. Nobody is perfect. If we look at someone like Michael Jordan, who, I grew up watching, to me, he's like the greatest basketball player of all time. And watching documentaries on Netflix of his rookie years in the NBA, as amazing as we know of him to have been, his early years were not what we know him to be. He was a great player, no doubt, but he wasn't the player that we all know he is, or who he became. And a lot of that has come back. A lot of that was built because of the comeback. They would lose in the playoffs, and he would, hit the gym. He would change his mindset. He would work on things, right? Like it's more than just like shooting a ball in a hoop, right? For someone like him, there's so much more that surrounds it. And with trading, it's the same thing. It's not just about identifying a unicorn pattern and trading it during New York AM session, or waiting for manipulation, and you want to catch a distribution leg, right, with an order block or something like that. Like there's more to it than that. So like, what is it that I'm talking about? Well, there's reviewing. You got to journal. You got to journal the shit out of your business. You need to log your trades. You need to log your emotions. You have to make notes, because you need to be reviewing these things. Like if it's not every week, like every month, you better be reviewing what you're doing. Review, the money going in, the money going out, right? Like all that stuff. The next part is like having a system reset. So like once you're like identifying that you were in a bad stretch, and you're reviewing, and you figured out some things that like you've had some epiphanies that, oh, you know what, I was making this mistake, and it was like maybe it just didn't make sense, or maybe it was like an oversight, or maybe you were just actively ignoring it. Once you kind of figure all that stuff out, you have to have a reset. right? You got to refocus on your process now over that outcome, which is like winning or losing, right? Just focus on the process. So I call it a system reset. And then ultimately, we have the comeback, right? You're going to start small. You're going to rebuild with confidence and build consistency. Set new habits for yourself, right? Like positive habits. You also need a routine. Like just waking up in the morning and like sometimes like I'll sleep in for whatever reason and like I'll be a little later to the charts than I want, and other times I'm at the charts at the time that I want and I've already made my coffee and I'm ready to go. And if I compare the two scenarios, I trade better when I have my routine, when I'm early, when my headspace is in check, when I'm kind of rushing to get to the desk and load up my trading view windows and get like trade syncer going and trade evade and like it's a mad rush. I usually make bad decisions in my trading day. And that happened to me today. I was a little late today and I made bad decisions, and I think a lot of it was just because of the rush when I think about it. So I was reflecting on what happened. So let's talk about bouncing back, right? Reviewing journal objectively. Journal objectively. Like we got to write down the trades without excuses or emotions, right? We have to identify these patterns with honesty. Something I talked about earlier. We got to identify mistakes and compare that to market noise. Well, like when we take a loss, are you breaking rules like an execution error, or did like Trump put a tweet out that just like fucked up your setup, right? Because that's happened to me before. Um, so it's important to kind of understand like what's happened. We need to also understand like market conditions, right? So what I've got written down here is the environment different from when your edge works best? So what do I mean by that? Well, it could be like a kill zone. Are you trading within a specific kill zone that you know works best for you? That could be New York AM. So like even something as specific as like trading before and after 9:30 is a massive deal to some traders, depending on how you trade. Is there low volatility? We know when there's typically no news, those days can be a little bit trickier to trade than days that have news. Josh talked about his trading day yesterday, for example, and how the PM just completely died off, right? The morning was also a bit weird, and we can look at that in a bit. But like, my point is like, you have to kind of understand that environment that you're in, right? And once you kind of understand that, then at least you know where you are time wise, because time is such a huge thing to this thing. So the other part is like revisiting, the trades, like your selection of trades. So some traders will use like, this is defined as A plus, or this is defined as B or a C grade type setup. Some other traders don't. I typically don't really look at it like A plus, B plus, C. Like I don't look at it that way. I just look at it very black and white, right? Like, did I follow all the rules of my checklist? And to me, if I did, then that's A plus. Sure. If I didn't, then obviously that's not A plus, right? We need to understand like, are we setting up trades out of boredom or frustration, right? Like sometimes we are just like hungry to trade every single day, and one thing I learned from Ash Trades, who is my mentor, like, don't have to trade every day. Like, it's okay to not trade every day. It's okay to just tape read if you want. It's okay to, miss a trade. It's okay that there is no trade on the screen for you if you're following your process, right? And like I said, look at your process. Don't look at your P&L, right? The losing streak doesn't mean the process is broken, right? The process has to be examined thoroughly. So like when I went through my losing streak, the first thing I did was I went back to my checklist and like I literally redesigned the whole thing. And I realized like my checklist was massively overwhelming. It was too busy. So I revised it and I put it into something a little more easy to read, easy to like go through while I'm trading, but it's okay that I'm making these adjustments. It's okay that like maybe I screwed up here and there. Like it's okay. I don't need to be perfect, but I do want to make sure I'm learning, right? And I just put this here because this is my actual checklist that I use, and I'll go over this in a bit, but I just want to show you this. Let's go back to my deck. And then, we got to ask ourselves these hard questions, right? No problem, Time. I appreciate you, man. We got to ask ourselves the hard questions. Like, am I following the plan? Or am I actually trading on emotions? And sometimes it's as simple as that, asking yourself those two questions. And the more we lie to ourselves, and I've lied to myself plenty, man, in the past 5 years of trading. I found when I started to become more honest with myself that's when the real success starts to emerge. That's when the real progress starts to happen. So be honest with yourself, be truthful with yourself. It's okay. No one is going to judge you. Typically, I'll be honest, I don't think anybody even cares. We are living in this world where we think people care about what we do, and the reality is nobody really cares because we're all working individual business. And I don't mean that to sound hard or come off strong or negative. It's not to come off that way. It's just sometimes we're wrapped around this idea that we are too worried about what other people are going to think because we see the social media presence of people, sharing all types of things. There's amazing traders out there, right? They're having insane payouts. And if we're trying to compare ourselves to people like that, it's not fair to ourselves, right? It's not fair to ourselves. And you can't compare yourself to someone who's in that position. They're in a completely different part of the journey than you are. But it doesn't mean that they were not where we are right now, for example, right? If you're still working on, building a massive portfolio, for example, or securing 20 funded accounts, or you know what I mean? You got to take one step at a time. There was a time where I had 0 funded accounts and I was watching people with 20. And I was like, holy shit, 20 funded accounts, that's madness. But I just continued to just secure one by one. That's all you can do, right? Because once you secure your funded account, there's the whole next level now you have to deal with that you didn't even know existed until you got there, right? So like I said, there's different parts of this journey. Just ask yourself the hard questions though. Am I following my plan? Am I sticking to my criteria? Or am I breaking rules and trading off emotions? So when we're bouncing back, we also got to have a system reset. We got to take a break. If you're trading the New York AM session and your time window is 9:30 to 12 p.m., when that time is done, the time is done. There's no reason for you to have, Tradeovate open, TradeSync open. There's no reason for you to be connected to your trading account through TradingView. All of that should already be closed off. You need to take those breaks. Sometimes you need a more strategic break, right? Best trade is no trade. And having a short pause can reset perspective and reduce emotional bias. And I'll give you an example. Tomorrow, I'm taking the day off. I got some family stuff I want to do. And I'm going to take that day off for myself. And it's okay. I'm allowed to do that. And it's important that, as individual traders, we recognize that with ourselves. We got to make sure we also simplify our charts. It's very, very easy to, add, I'll put it this way, 2 degrees have made so many amazing indicators. And at one point I had them all on my screen because I was just so giddy about them. I thought they were I was amazed by all of them. And the thing is, it's not to say that there's anything wrong with those indicators. They're amazing indicators, but all those indicators might not work for me, right? You have to be able to pick and choose which ones are going to benefit you, right? Because they're very powerful indicators, individually. The point what I'm trying to get to is simplifying your charts, cleaning them up, remove the clutter, right? Anything that's non-essential to how you trade, you got to make sure to take it off your screen. And I had to do that. I had way too many things going on my screen that it's confusing me. And that's something I told myself or learned about myself years ago. And I said, if it get to a point where when I look at things on the charts, it overwhelms me, it confuses me, or gives me conflicting information, I need to start taking everything off and reverse engineering it again. So just take that step, right? There's nothing wrong with having a clean chart, right? I think one of the things that I think when I first started learning about futures trading in early 2024, when I joined Unicorn University with Ash Trades, was like just learning how to trade with a blank screen. Like I didn't even know how to do that properly. And that was one of the most like amazing things I learned, was being able to literally trade off market structure. Um, and it's not that I was going to be perfect or I'm going to get it right, 80% of the time, like not even. But being able to just understand like clean price action is so important, so that when you add these amazing indicators that 2degrees has, all it's doing is it's making your process more efficient and making your decision making that much faster, right? It's just making your life easier. But you still have to understand the price action at the very, at the foundation of it all. Now, we got to rebuild confidence with our simplicity once again. This goes back to like the topic of this part here, right? The system reset. If we're trading like a handful of different setups and you're screwing up all the time, like you need to scale back, focus on one setup. There was a time where I was just experimenting with a bunch of setups, and I realized, I'm getting a little overwhelmed by this, and it's not actually really helping me. It's not to say that each of these setups is not valuable or profitable. I think any one of them is very, very profitable because they've already been proven that they're profitable. But the thing is, it's like, which one aligns best with my personality? Which one aligns best with like how I want to trade? So focus on like that one setup, that one strategy. I was trading at one point. I was trading NQ, ES, CL, GC, and 6E. Like that's a lot of assets to be trading. What's up, Raphael? I have now scaled it back to one asset. I'm literally now just trading NQ. That's it. In terms of the time frame, I was trading the 5 minute one point, and now I'm trading specifically the 1 minute. You know what I mean? I'm doing this because I feel grounded again by doing this. So we have to shift back to the process thinking, right? Like shift back to process thinking. Excuse me. So judge ourselves on the execution, not the result. Execution meaning, did I follow my plan? Result means, was I green or red? Right? How much money did I win? How much money did I lose? How many R did I make? How many R did I lose? Right? So once we have our mindset reset, then we can start using routines that are going to like center us, right? This is what I was talking about earlier with the mindset, like keeping us on track. I told you how when I have a routine and I show up early to trade, I typically have a way better read on the market, and I feel more aligned with what's happening. But those days where I'm rushing, it's the opposite, right? So in terms of a routine, some people, it involves exercise, meditation, journaling, right? Reviewing winning trades to remind ourselves of the previous discipline, like the past discipline. However, you schedule these routines into your daily routine, that's obviously up to you, right? Some people want to take, like, for example, I'm a guy that likes to exercise typically in the morning versus later in the day. And then like in terms of meditation, I like to meditate later in the day. Some people like to exercise like after the trading day, right? They get that all out. They get all that weird energy out. Some people like to journal during and then journal like later at night. For me, I like to journal like right away. That because it's fresh in my head. So the whole point though is to create a routine that helps you with the reset, right? Because you need to like build a winning frame, you need to build a winning framework to your trading system. It's not just trading horizontal lines or chart patterns and this and that. Like there's so much more around that. You have to round out the whole thing, and detaching ourselves from the outcome, right? Like we can't chase these setups. We can't chase 2R or whatever the PL is, right? Don't aim like trying to get it all back in one trade, right? Like stack good decisions. It's not about stacking good trades. It's like stack the good decisions, right? Not like a quick recovery, right? Like your bounce back can't be like a V-shaped recovery, if that makes sense. Like you have to stack good decisions and take time, like one trade at a time, one day at a time. And it's okay that it takes time. That's how it works. The best traders that we all know, and like we're all probably all following the same people, But like the best of the best are typically, you know, focusing on that routine. They're focusing on, you know, not so much the outcome, but like, did they follow their plan, right? I can guarantee it. So if like, take a look at these people, they're probably all doing it. I guarantee that they are. Okay. Okay. So, and then the last piece here is the comeback, right? Comeback is always greater than the setback. Gotta always remember, like, to be perseverance, right? To persevere, like, you know, you got to dig deep because we can do anything we want. Anything we put our minds to, we can do. Got to believe that, right? So what does that look like practically? Well, don't FOMO into trades that are not A-plus setups for yourself, right? Trade the highest probability setups. So if you have a checklist, like I have my checklist, so like if I have everything properly checked off here, then I'm technically trading an A-plus setup for myself, okay? Like I'm not breaking any of my rules, right? Whatever those may be. So when these setups are well-defined, this is going to eliminate the noise. It's going to rebuild your trust in your trading system, right? Because if your trading system was profitable over the past 6 months, and now you're in, like, you know, say a 5 or 7 loss losing streak, it doesn't mean that you're not, like, it doesn't mean that your edge, like I said earlier, it doesn't mean your edge isn't working anymore, right? You just kind of have to rebuild that trust in that edge that you had, and that process that you had, because there's probably something you're doing. And it could be, like I said, it doesn't have to be technical. It could be a mindset thing that is making you make the wrong decision, right? So when that happens, start small and build gradually. Reduce your trading size until you start to become more confident again with what the process is showing you, right? Like that you're putting, like you're stacking your good decision making one after the other, right? And that you're starting to see, like, hey, you know, maybe I went red in my, you know, my 250 account, so now I'm at like 248, for example. But like I'm now gradually rebuilding, and hey, I'm back to 251, right? Like that's a sign of success, right? Because you're following your process. And sure, we can use the P&L to see where we are in terms of like a range, but it's not about the P&L. It's about, hey man, I went from 248 to 251. Like that's pretty darn good because you bounce back. And you need to focus on consistency over the profit, right? A streak of disciplined trades is way more important than a streak of wins, okay? Because you're not going to win everything. And we all know, you know, with a 2-to-1 RR ratio, you only, like, I think break even is at 33%. So even if you have a 40% win rate, you're still winning. Now that's a whole other bag of worms, because like you have to still be able to withstand the mindset that you're losing 60% of the time, and that's something I can't do. I've tried it. 40% win rate models, just it's not for me. I need something higher. But once again, it's about focusing on consistency, right, rather than like the actual end goal of like I got a 2R or I won, because you're not going to win everything. You need to reaffirm discipline. Every trade should follow your plan, right? Like I showed you my checklist. If I have like a gut feeling that this trade's going to go, you know, to TP, and I have like FOMO about it, right? Because I saw someone in my Discord share a chart and it looked amazing and I didn't notice it. Is it following my plan? You got to make sure it's following your plan always, right? Especially when you're trying to bounce back. Like you got to like really block out that noise. And you know, once again, you got to reinforce the positive habits, right? Like your routine, sticking to your rules through a checklist, right? And you know, when you have discipline and you've done everything you're supposed to do, like you should celebrate that, right? Celebrate discipline, celebrate patience, celebrate the fact that you followed your rules. It has nothing to do about the outcome at this point. And I know it sounds like cheesy, or it sounds kind of silly, or you know, you might even think it sounds unrealistic, but in my opinion, it's insanely realistic. It could still be cheesy and all that shit, but like it's very realistic, right? You have to adjust your mindset massively. And then once again, lean on your routine, right? Stick closely to your trading routine to restore the rhythm and the flow. It's always about the vibe. It's always about the vibe. Some of the best traders I know who are winning more than losing, they are very quick to recognize like when they're making bad decisions, and then to just take, just basically take a break, right? And then they show up the next day and they're leaning on that routine that they have, right? Whatever that is. Could be going to the gym in the morning, right? Meditation, getting to the chart early with a cup of coffee in hand, taking 30 minutes before the market opens to analyze the higher time frame, the MTF, and before even looking at a lower time frame, right? Not even looking at social media, for example, just sticking to your guns, right? So before we get to mindset and takeaways, which is pretty much the back end of this, anyone have any questions? Or has anyone experienced any of the things I'm talking about?
Like everybody be interactive, please. There's about 50 of you that are in here inside of the audience right now, and I'm sure many more that's going to be watching this, even on a recording. Drop a comment or definitely be interactive in the chat. We want to hear from you as well. This is a open discussion that it's all based off of us growing together, understanding your own vulnerabilities and what either triggers you and or what you could learn from to improve. The sooner you can get it out of your mind from just an initial thought to now having an action, the faster you're going to actually progress. And that's just a given. Because if you basically hide behind your progress, then ultimately, you're not really making it known what it is that could be stopping you or having an impeding effect on your growth curve. So just be honest with yourself in this. It's really important.
Yeah, Bobby says here, my biggest struggle is detaching myself from the outcome. 100%, man. One of the hardest things to do. One thing I used to do with my charts is I used to have the money show, like when you take a trade, like how it shows like your P&L. What I did, someone had mentioned, I apologize, I can't remember who it was that told me this, but they had dropped this gem saying, stop using P&L on your charts, change it to ticks. And by changing it to ticks, that there's a huge emotional piece that disappeared immediately because I had no idea what the P&L was. Like I know I'm risking X amount of money per trade, but when you're looking at the chart and you're seeing the lines and everything, like I don't have an emotional reaction to seeing the dollar figure go up and down. So like Bobby, the only reason I say that is because like it might help with detaching yourself from that outcome. It's slightly like in real time. I think beyond that, we got to start looking more into like your data, right? Like I talked about how you got to lean back into your data to like build like confidence in what you're doing, right? Let me see if I can find that. Where was it? I can't seem to find it anymore, but it's still that same point. Excuse me. Just fall back on what you have that has been working. I'd read something the other day where it was talking about how often when we are in losing streaks is when we take a step back to start seeing like where we went wrong, what was I feeling. But there's also a flip side to this because when you're actually winning, you should also be looking at like how you felt. What were you thinking? How was your routine? Because those are the things that attribute to you winning, right? Not losing. So you can kind of lean on those types of qualities to understand like what you were doing when you were winning versus what you're doing when you're losing. It could be mindset, right? Could even be a simple mindset thing. Like, I woke up with like I barely got any sleep last night and I was very anxious when I came to trade, right? Like understanding that you might have been anxious before you traded and you may have taken some losses or had a bad day versus when you have a winning day when you're not experiencing anxiety and you had 7 hours of sleep. Like that's a big tell, right? Like maybe don't trade if you're running on 3 hours of sleep or if you're feeling anxiety, don't trade. It's not worth it, right? I appreciate everybody commenting and sharing things because I mean that's what this is about, right? It's like the honesty piece, right? And I'm not saying everybody has to share everything, but anyone that is like, I think it's helping other people that are reading it and that are here. So I appreciate you. I'm just reading through the chat just to make sure I haven't missed anything. Bobby says, I have actually started to have my platform on a different monitor than my charts, and I don't even look at the platform. And since the trade is not on the chart, it helps, but I struggle a bit. Yeah, I mean, some people need to turn everything off when they take a trade, and they just set alerts to wait and see what happens for sure. If that's what it takes, like that's what it takes, right? Until you start to build that trading stamina or endurance of experiencing the roller coaster ride. Like I had a massive roller coaster ride yesterday on a winning trade, and was trading it post by post inside Unicorn University, and we were all kind of like, whoever was discussing it with me in my thread, we were all like, just like, oh man, this is going to hit stop loss, and it didn't, and then it went the complete opposite way. But sticking to the system, sticking to the checklist, sticking to the rules. That's all I did, and I didn't interfere with the trade. I just let it play out. I think in the past I used to interfere, and I felt like I couldn't be that kind of person that just shuts things off. Like I had to sit there and watch it with my hands, like sitting on my hands and putting myself through the ringer that way to numb myself for like future trades, because it's like practice, right? It's like someone who's, I mean, it's not exactly like this, but my metaphor is like, take someone who's like in the Navy SEALs, or training in the military. Like we see these videos on Instagram and stuff like that, and the hardship they put themselves through, so that when they're actually in the actual situation itself, they've already like they've already had so much experience with dealing under pressure that they're able to begin to make like better decisions in those moments, and they know how to calm themselves down, or they know how to work through that stress. I think with trading, it could be the same thing, right? Like putting yourself through um, watching a roller coaster trade and not touching anything, just watching it. It's hard. Super hard. Jason says, by making those changes, I've experienced some of the best trading I've ever experienced. A clear mind is truly the best solution, since it's just you versus you. Yeah, 100%. 100%. Time says, for me, what helped me detach a little easier was not putting so much pressure on my trading, not having the outcome dictate how my life would be outside of the charts. For example, if I'm being codependent on receiving a payout or getting a withdrawal from a live to pay bills or a live to pay bills, don't expect your trading to support your lifestyle. For me, maturity point was to allow my trading to evolve into those things through compounding good habits, like we're talking about today. Of course, all those things are only possible with a long-term perspective. Time is the most important thing. Yeah, I mean, like it comes down to experience. Like I said, with like people who are training to be, in the Navy SEALs or in the military, and like, God bless those people, but like they have to put themselves through some serious, serious hardship, right? And they have to have that time in those motions to experience like what it's going to potentially be like for someone like that, right? So like if we take that metaphor to trading, it's the same thing. Like we have to train our minds and put and doc like experience through hours, right? Showing up for live trading. Live trading is very different than back testing. You need to show up. If you don't show up, you're missing out on an opportunity, right? Even if you're not trading, like if you're just tape reading, it's still live trading. Like you're putting yourself through education that way, right? So, all right. So, mindset takeaways: handling a losing streak isn't about avoiding losses. It's about protecting your capital, managing your mindset, and positioning yourself to become or to come back stronger, right? Longevity is greater than perfection. So once again, just to round out everything we kind of talked about, losing streaks are inevitable. No trader is going to escape them, right? This is a game of probabilities, not certainties. We need to be resilient instead of perfect. Best traders aren't those who avoid streaks, but those who are able to handle them with discipline, right? So when they're winning a lot, there's a certain way to be disciplined about that. When we're losing, there's a way to be disciplined about that too, right? Your real edge is your emotional control in this whole thing, right? Like Bobby was saying, and what Time was saying, like about time, right? Like you need to, or sorry, the you versus you topic. Like you have to control yourself in any scenario. It's not just like trading; it's like in life. You always have to be in control of yourself. I'm someone that is like 100% sober. Like I'm 100% clean. Like I don't drink. I don't do. I don't smoke. I don't do drugs. There was a point in my life where it was out of control, right? I'm sure there's a lot of people that can relate to that. I had a problem, but guess what? That problem like took over my life in a way. And what that does is it leaves me without being able to control myself or to control my emotions. So being emotionally controlled or being emotionally in control is massive for this type of thing because it's just you, right? So strategies can be copied, but like watching like Ash Trades be so calm while he's in a trade, like I can't copy that. I have to like learn to like I have to learn to be able to do that, right? Watching someone, like I mean, any trader we know like that is staying out of a trade, and you're thinking, oh, why is that trader not taking that trade, right? Like, why are they not taking that trade? I would take that trade. Well, they're protecting their capital. You can't copy that because you have to be able to understand how to do that and why to do that. You gotta emotionally control yourself to understand that. And then in terms of adaptation, like you need to adapt. You need to adapt with what the market is doing and how you're trading in that market so that you stay in the game longer, right? We talked about living to see another day. We need to detach ourselves from the identity of the outcomes. Just having a losing streak doesn't mean you're a bad trader once again. It just means the market's doing what it's doing, right? Now, how you're going to respond to that is what's going to define you. We got to look at the big picture. We got to look at being in this game for the long term, right? Like think in terms of 100 trades, not one trade, right? Like coming from the crypto space, a lot of people just hit like one, like every hit has to be a home run. I found, and the reality is, like when I came into futures trading, it was like I kind of brought that in there, like thinking I could just hit one home run and all my problems would go away, and it doesn't work that way, right? We got to think about the long term, like hundreds of trades, right? Stack those trades together, stack those good decisions together. Because winning streaks and losing streaks are definitely both going to pass. And the one thing that's going to remain amongst all of that is your consistency. So the bigger picture is that trading success comes from stacking disciplined decisions over time and not chasing quick wins. Okay, so I hope everybody took something away from this today that, if you learned something from here, that's amazing. If you, if you can relate to anything that's on here, like that's amazing. Pay it forward. If people are asking questions to you, if you see people that need help that are struggling like on Discord and they're having enough courage and they're brave enough to share what's happening, like support that person. If it's in your Discord, like support that person and use some of the things we talked about today to help them. I will be sharing this PDF, so everybody will have access to it because I think it's important. So no stress there. And yeah, after that, what were we going to talk about next? How are we doing for time? Josh, we still good for time? Just to double check.
Yeah, brother, I'm here. We got
Sick.
another 54 minutes that's on the schedule, but the stage is always
Perfect.
yours. So whatever you feel comfortable, you're always welcome.
Appreciate that, man. All right. It's a lot of awesome comments in the chat. I appreciate everybody sharing stuff. Like, there's a lot of great stuff here. And like, I thought for a long time, like the best traders are the ones that are like the influencer types. And I realized like after, being in a handful of different discords while I was starting to learn about futures trading and just getting to know some people in the 2 Degrees Discord that have their own discords and they're amazing traders, that there's so many amazing traders that don't have a social media presence. And it blows my mind how many there are. So credit to all those people, man. Like you don't have to be on social media sharing charts all day long. And especially to help people. So amazing job. All right. So the next thing I want to talk about, I guess, is a trading system, right? Like let's talk about some charts for a bit, shift gears a bit. I can show you, like, I mean, there's so many different ways to trade, right? But I like to work on the foundation of things. I talked about how using clean charts is the way to build a foundation. It's like what I learned. So if I just kind of walk you through some basic concepts that are insanely important that can help put you on the right side of trading, it might go a long way. So let's take a look at, let's see, let's look at, let's just go back to yesterday. Okay, so this is NQ. I'm on MNQ, but NQ basically. And, it's Monday. There's no news. I like to trade off of time frame, like hard time frame alignments, where I'm using H4. H4. Oh, let's make this bigger. So I use H4. I use the 15-minute, and then I like to have my executions on the 1-minute time frame. Okay. The other alternative for some people would be like the daily, the hourly, and then the 5-minute, right? That could be another option that's, typical of most traders from what I see. Obviously, you can go higher than that, right? Like you go weekly, 4-hour, 15-minute. There's a bunch of those alignments, right? But typically for most people that, that I'm surrounded around, they're basically doing this, one or the other. For me, like I said, I used to do the daily, hourly, and 5-minute. But I think I just felt like I wasn't getting enough trades to like suit my personality type. And by not being in trades, I started realizing like I was making a lot of bad decisions because I was like forcing trades because I was like almost like I was bored, right? We talked about that, but I noticed that about myself. So kind of going back to the drawing board, I was able to put something together where I can start to get back on the 1-minute time frame, which is what I was using before I even joined Unicorn University and started learning about futures trading. Like this is when I was trading forex, but like I was using the 1-minute time frame, and then I started learning that on NQ with the 2022 mentorship model. And I thought I was doing pretty good with that too, right? But I wasn't learning enough. There's trades that went stop loss, and I didn't understand why. So once I started learning more about the ICT concepts, then I started realizing like what was happening. But for the sake of what we're doing right now, H4 15-minute, 1 hour. So like, what am I doing? Well, when I show up in the morning, I like to show up at 9 in the morning, first off. Okay. And what I do at 9 is I look at a couple of things. The first thing I look at is on a very clean chart, nothing on here. Like I have this indicator, but it's just there to show me the FVGs because sometimes my eyes mislead me, or sometimes they're so small I just don't see them, right? Like I might have missed this one, for example. But this is obviously pretty big, hard to ignore this. But I show up for 9, so that's in this candle, and I look to see where the higher time frame price action is. So when I'm looking at where the higher time frame price action is, it's inside of a bullish FVG. So the way I'm going to mark my chart is I'm just going to position a H4 bullish FEG. And one of the simplest ways to form a bias is by understanding where price is located in terms of its liquidity. Is it inside an internal range liquidity, or is it located at external range liquidity? So in this situation, price was located at an internal liquidity range. And all I'm going to do is look for price to rebalance and imbalance, right? To a certain extent, right? Or take the liquidity. So in this situation, I would just be looking for price to move higher. Like this is my goal, my target, internal to external. Once it hits this, that objective is met. And now there could be another objective, which could be based off how price reacts to this. We could flip and move from external, right? There's still a unmitigated portion of the H4 FEG here, right? So if price eventually starts to move like up here, for example, right? And then we start getting a sweep. Well, now I can start to position myself into shorts and say, well, hey, you know what? We're at a H4 swing high. That's an ERL. So I'm looking for ERL to IRL. But in yesterday's trading session, I was bullish because I wanted price to go higher. It was inside of a bullish FEG, and I wanted the price to at least hit this target right here, this H4 ERL. So I'll mark that off as an H4 ERL. Right there. Okay. Hey, take care, Bird. Thanks for being here. So then I go to the 50-minute. And when I go to the 50-minute, it's more or less Now a question about time. So time is insanely important. Need to make sure I'm trading from 9:30 onwards. I also need to make sure that there's no news. And yesterday there was no news, right? So sometimes we get news that drops at 9:45 randomly. Sometimes there's news that drops at 10. I would like to try to trade post that. I've had trade setups where it looks like it's going to work for me, and then I think like, well, maybe when the news drops, it'll trade in my favor. And of course, what it does is it wicks me out, and then it goes in the direction that I wanted it to go into. So it's always best to just wait, in my opinion, for the news to drop and then trade, because you don't know what's going to happen, right? So when I show up at 9:30, which is right here, this is 9:30. I'm on the 50-minute chart. I know I'm inside of a bullish FEG. The only thing I'm looking for now is I'm looking for whether price is sweeping an external range of liquidity because I'm bullish. So I wanted to sweep a swing low. And sure enough, at 9:30, we get a sweep of the lows right here, right? So these are the pre-New York Open lows. And I'm just going to mark that as a 15-minute, you're up right there. Boom. Then I'm going to go to the 1 minute. And this is where things get a little bit tricky because yesterday the price was like bouncing all over the place. And when I look at it here, this is 9:30 right here, right? So the first thing price did was it went higher. Okay, let me just get rid of this for a sec. So the very first thing price did was it went higher. So we have the open and then it shot up higher. So I was looking for a sweep of these lows to go long. Now, here's the thing. Some traders, like myself in the past, would see this start to play out and go higher, and I would just FOMO in, thinking, I missed the trade, it's going higher, right? And then sure enough, you get this massive sweep that occurs and takes you out of your trade. It is super important to be patient. If you're looking for a long, you need to align those longs with the POIs that matter, right? So we have the H4 bullish FEG. I need that 15-minute sweep to happen. So sure enough, after that move goes higher, we get a sweep. And it was an aggressive sweep that goes lower, okay? So now price goes lower. We are now like aligned with our higher time frame, with our MTF time frame, like it's all there, okay? Now, I'm going to show you my checklist for a second, okay? So what I like to do is I like to make sure I'm trading inside of my window, right? First and foremost. This looks silly, but it's no sillier than like being in school on an exam and having to write your name at the top of the sheet and getting a point for it, right? It's the same thing. This is the equivalent to that. So like I have that here, it's basic, but I have to put it there, okay? So I make sure I know what I'm trading. So I'm trading that kill zone. The second thing I look at are, like I have manipulation windows here, which relate to quarterly theory. 2 degrees have a free indicator actually that is insanely powerful. I'll put it up here. It's called the day quarterly theory by 2 degrees. Like I remember learning about quarterly theory like a while ago, but it just didn't make sense. And then I started learning it again from another trader. And because I always like to learn, I always like to study other traders and especially like ones I feel more aligned with based off the messaging. They're not like engagement farming or anything like that. They're not trying to like sell me anything either. So I started studying off, another trader, and they were like using a lot of Trader Day's quarterly theory ideas and these micro quarters, for example. And the reason this kind of stuck out to me was I've always wanted to like implement SMT into my trading. However, I would always screw up the anchor points. Like I'd always screw up where the SMT would form. So when I started understanding more about the quarterly theory, micro manipulation ranges, right? So we got like quarter 1 here, quarter 2, quarter 3, quarter 4. What became very, very clear was I can form SMT between these micro quarters or between like say these 90-minute quarters, which are on the bottom. And I didn't even know there was a term for this, but there is a term, and it's called SSMT. I had no idea about this. Let me see if I can find. Can I go on the checklist? Yeah, so this is why I put it here for a sec. I have updated this from my last stream, kind of repurposed it, but SSMT stands for Sequential Smart Money Technique. And what the whole idea is about anchoring the SMT between these quarters, these time quarters. So the reason I gravitated to something like this, because I'm a very mechanical trader. I don't like making, like, I don't like to have to make too much or too many discretionary decision making in my trading ability. Like, especially when I'm in it, like I want things to be so mechanical that like it's undeniably clear. Like price sweeping a 50-minute ERL is very, very clear, right? It's very, very mechanical. I need that. Understanding the SMT component, I used to think like, using SMT like this would sometimes work, sure, but sometimes it wouldn't. And I would go, I don't understand. It was SMT at a hard time frame POI and it didn't work. When I started understanding with utilizing quarterly theory micro quarters with SMT, was that typically like the trades were I think I went wrong with SMT, was that the SMT was forming inside the same micro quarter. So what I learned was trying to use SMT to form between like two different quarters. So it could be this quarter and it could be a quarter here, right? So that would be a 90-minute cycle quarter, right? From here to here, for example. So if I put up, we'll just put this back up here. Okay, so there we go. And there we go. So what I started doing then was like, just like probably any other trader, right? Like I had a separate screen going and, this just confused the shit out of me having multiple screens this way and trying to analyze it, or maybe it looked like this. This is probably what most people do, right? This was really messing me up. I just couldn't get a read properly for this. So I went back to my old crypto days where I'm used to do like fractal alignments and mirroring things like that. And I thought, well, why don't I just add the actual chart like to my actual chart, right? So I can actually see it right overlaid on my chart. So if this is ES, I have it set on the right side here. And what I can do now is like more easily see the potential for the SSMT versus if I had it on two separate panes, or if I had it on two, separate like windows or whatever it is, right? What I've done is just like overlaid it on here. Okay. And I'll walk you guys through how to do this. It's so simple. So there's a plus sign right here, compare or add symbol. You're just going to hit that. In this situation, I want ES. So I'm just going to type in ES. I'm going to click it. It's going to make me pick ES1. And what I'm going to do is put it on a new price scale, right? Let me stuff and scratch it. One second. So let's delete this. Let's delete that. Let's do this again. ES. Okay. And what I'm going to do is I'm going to put it on a new price scale. Okay. So now I've added it to my screen. This is what it looks like. The price scale is on the left. Okay. The first thing I'm going to do after that then, or the next thing I'm going to do after that, is I'm going to hit right click. I'm going to go to pin to scale Z, and I'm going to change it to pin to new right scale. So I want it to be on the right side. That's how I like it. So I'm going to pin it to the right. So now it's pinned to the right. The next thing I'm going to do is I'm going to click the right click, and I'm going to make sure it's set to regular because I don't want to have a log chart. I want to have a linear chart. Now I have this line. So the way I like to work my aesthetics is I like things to be very, just monotone that way, like just black and white. I don't need things to be so bright. So what you can do is just go to the settings, go to style, change this to candles. Now I have candlesticks. Okay, how do I want my candlesticks to look? So I definitely don't want them to be red and green. So I'm just going to go to my, to the aesthetics that I like, which are basically gray tone. And I'm just going to shift this to how I like it. So I like to use this secondary gray at 50% transparency. And then I like to do the same thing on the other ones, except have them at 100%. And what you end up with is something like this. Right? Now I can actually move this price. I can control it from left to right here. It's going to overlay on top of my price action. So what this does is it now makes my life more efficient and easier to see. I don't have to keep going between two different screens. Okay, so there's a quick tutorial on how to do that. Now, like I said, with SSMT, I need to determine if like I'm going long here, like I need SSMT to take that position. So the way I can see it now is I can use ES, but I can also use YM, right? So let's just add YM to this. And it's the same process. I'm just going to click my template so I don't have to do it again. But I end up with ES on the top, for example, right? It could be like this. And then I have YM potentially on the bottom, right? It's the same thing in terms of adding, like how you would do it. And I could do, oops. Backward. I think I mixed up what I had to do. Sorry, one second. Put these all up here. Get rid of the FEG for sec two. Okay, so here's why I'm on the bottom. Make that a little smaller, make this a little smaller, and move this down a bit, move this higher a bit. So what I can do now is compare quickly the SSMT between both assets without having to do anything except what you just saw. Which usually I can do very quick, but I think because I'm on a live stream and I'm probably just like, clicking the wrong thing, you know how it goes. So SSMT, I'm looking for SSMT, which means I need to see these anchor points like swing highs and swing lows. In this case, I'm going long, right? So if one asset's making a low and a lower low, I need to see a low and a higher low, okay? And sure enough, what I see is that we have a low here, which is what we know is there. But what I need to see now is ES and or YM making a higher low. So if I just drag this out like this, I put in the word SMT here. What I can see is that YM at the bottom here is making a higher low. What I can also see is that ES is making a higher low. So this sweep, which is coming inside of an H4 bullish FEG, which has now swept a 50-minute ERL, which now has SSMT, perfect. This is telling me that I should be looking for something here. And it's coming inside of this manipulation window, which is just basically Q2 and Q3 of the micro time cycles. It's usually run about, I think, 22 or 23 minutes. Combined, it's about 45. But typically, the manipulation will form inside of these two quarters, Q2 and Q3. So I always look for that. And obviously we know it's New York Open, right? There's always manipulation at New York Open. So I wait for that open. I get the manipulation. I identify my key levels. I see my SSMT. Perfect. I'm going to take this off my screen now because I don't need it. I know that it's there. The next thing that happens now is, because we're all staring at the same shit, right? But this is the foundation. The next part is where things get tricky because everybody has a different way of entering, right? If I look at my deck, you got IFEGs, you got FEGs, you got order blocks, you got change state delivery, you have unicorns, you have OTE. Like there's so many different ways to enter a trade. It could just even be a simple market order if you believe that price is in the right area, right? For me, what I've started to do is I'm utilizing more of a lower time frame sweep. Like I really want to make sure I see a lower time frame sweep, and I want to try to enter on the change state delivery. Typically. However, if the change state delivery is too high, then I might enter off of, say, an order block or an IFEG. Okay, so yesterday's trade, when I say order block, I don't mean the order block right here. It means like if I miss this CISD entry up here and say like price goes a little higher, and there could be another order block sitting around, like I'll enter off that a little higher with a tighter stop loss instead of being like all the way in the swing low. But yesterday's trade, because the change state delivery, which is right here, is so close to the IFEG itself, which is right here. Mark it off like this. Okay, so you have the IFEG there. You have the change state delivery. Now, I mean, I could even add the dodgy indicator, which we know also is a pretty powerful indicator when it comes to looking at IFEGs. Wait for this to load quickly. And, depending on your settings, however you do it, I'm just going to take the table off. Depending on like how you set your parameters up, like this is basically the default settings. Typically in the past when I was using this, I was using the small IFEG threshold. So it's like it wasn't every single IFEG. It had to be a specific size. So if I turn the table back on, you'll see that it's the IFEG threshold is 9 ticks. Whereas if I had it set to like a different setting, it would increase or decrease. Well, actually, in this case, because it's small, if I set all, it would just be everything. But if I put it up to medium, it would lower or it would increase the tick size, meaning that the IFEG size matters. So it needs to be a little larger. But typically, this is kind of how I had it set up. But the only reason I'm showing this too is because like if you have a hard time identifying IFEGs or like quality setups that way, using this indicator is amazing. And this is what I actually started using when I was really trying to study more about the IFEG. I brought this indicator on board, and I was so happy when 2 Degrees and Dodgy put this together because it really helped fast track my ability to understand how to trade them more efficiently. And part of trading is personalization and customizing things that you might see to fit something that makes more sense to you, right? Because like trading is not a one size fit all type approach. We can take different ideas and systems from other people that are working for them, right? And it might not even work out properly, right? We might be like, hey, I'm doing exactly what that person's doing, but I keep hitting stop losses. Like, what am I doing wrong? So sometimes you gotta like reverse engineer things and add specific criteria that make sense to you. But in order to do that, you still have to educate yourself on it first. So that's kind of my point. Is like I added this indicator in the past because like it really helped me to understand more about the IFEG. Like I had no idea that. First off, I had no idea that IFEG's size mattered. Okay, and it sounds silly, but I never traded IFEGs. I was trading breaker blocks. And anytime there was a move through the breaker block like this, like to me, it was just like, oh, there's a BPR there. But I would never have considered trading off the IFEG. And then I started learning more about the IFEG and trading through it. And I was like, wow, this is actually pretty cool. So definitely check out that indicator if you haven't already, because it really helped me. It might help you. And it does provide signals and stuff too that you can like work to function your trades with and set things up. Okay, so basically yesterday's trade, you can see there is the Dodgy indicator does show up because that is a pretty decent sized IFEG. And I already knew that was because of all the training and education I was doing with myself or learning by myself with that and just working with other people. So what I did instead though was I didn't enter here because it's so close to the change state delivery that I just used the change state delivery itself, and then my stop loss just put at the bottom. Okay, so that was basically the setup in terms of my entry function. But when we set this thing up, we also got to understand like the draw liquidity, right? Like where is the draw liquidity? And when we show up in the morning, it's great that we look at the hard time frame POI, right? The H4, right? To figure out the buys. But once we kind of figure that out, we start going to these lower time frames, and we start getting alignment with the MTF, and then hey, there's SSMT now. Okay, now there's a change to delivery. We still have to understand like does price have a draw liquidity to reach for, right? So one thing that like always sticks to me is like session highs, session lows. So in this situation, like Asia highs, London highs, these things become very, very important. So if I'm looking at the Monday session, which is basically like right here, here's midnight, right? So I can see that the Asia high in terms of like that kill zone, this up a little lower. Okay, so here is the kill zone right here, right? So APM's right here. I know that this is Asia high right there. I'll mark that off as Asia high. I know that right here is London high because it starts at about 2 in the morning, right? And Josh is saying you can toggle on the liquidity depth with that. I personally don't have much experience using that, so if I put that on, I'm probably going to screw the whole thing up. I apologize. I'm just going to go manual
I think
for
you might
now.
like it, honestly, because the London high and the Asia high, they're like pre-programmed already for like the one setup for life, and they also have the labels on it. So we can go through a little small
This one?
learning curve. Yeah, yeah.
That's
But
good.
I think you would enjoy it, honestly. If you toggle on the settings real quick, I can help you out with that.
Sweet. Let's go. Let's go.
So you see where it says candle for the type? You can just do the
Yep.
one setup for OSFL. That's like the one
Mhm.
setup for life for what ICT teaches.
Amazing.
And you should be pretty much set up with that
Oh,
once it
that's it.
loads.
Okay.
Hold on a
Perfect.
second. Go back to the settings real quick so I can just clean up some
Yeah,
lines
let's
on the
go.
chart for you.
Sure.
And then you go to the depths, scroll down a little bit, and you see where it says depth 1, 2, and 3? You could toggle those off.
Okay.
And then
Toggle
if you
tape.
want the labels, which I believe you do, if you scroll up, um, I believe that the session labels, you just passed it a little bit. It's underneath the
So,
session EQ, and then you can just do,
oh, right here.
yeah, yeah. Instead of none, just do like long form or short form, whatever you want, and then it
The
should
log
plot
form.
them for you.
Sit. All right. Let me just delete this, whatever I had. Oh, there you go. That's
There
it.
you go.
Okay, perfect. There we go. Boom. And we have PM high. Ah, look at that. Look at that. All right. That
Right
looks
on.
pretty sick. Nice. So thanks for that. That's amazing. Look at that. We're always learning, man. Always learning. I love it. And that's a really versatile indicator. I gotta say, from whatever I have seen of it, there's just a lot of features with that thing. So I definitely need to go back to school for that. But going back to this setup, I'm looking for drawn liquidity. And if I'm looking at session highs, because I know we've already swept liquidity at the lows, I'm targeting these highs right here. Okay. We got equal highs here, and we have an Asia high here, right? So I'm targeting at the minimum this, right? Now, when I'm measuring up to here, though, if I measure this up here, if I'm using a stop loss right at the base, that's going to be about 1.36, and I need a 2RR. That is my goal. That is my objective. So this is not giving me 2R. So there's two ways to go about this. If I'm really stuck on taking my TP here, right? I can either just face that it's going to be a 1.36 trade, or I can move my stop loss higher. But by moving your stop loss higher, yes, this will increase your position to 2R. You do risk the possibility of having a stop loss, right? And as you can see, if I move this up to here, like with a tighter stop loss, I would have actually been stopped out, right? Right here. So by keeping it at the swing low, I actually avoided that stop loss hit, which I thought I was going to get hit. I was actually quite surprised seeing this happen like that, because I had looked at my checklist and I was like, hey, we're in the manipulation zone. We have H4 internal range liquidity. We have, a 50-minute ERL that got swept. I'm on the lower time frame, 1-minute chart. There's a chain state delivery. There's an IFUG. There's SSMT. I'm following all my rules, and price just will do whatever the hell it wants, right? Like remember, this is not about certainties. Exactly, Jason. This was us yesterday, for sure. And it's about probabilities. So if we're dealing with probabilities, then I have to let this play out. And we talked about, Bobby was talking about like not having trouble like seeing a trade through, for example, because the outcome is what is the challenge. Seeing something like this, I know a couple traders that exited here at break even because they didn't like what they were seeing, and they may have had a lower entry. Other traders like me just have the stop loss at the bottom, and it's just like ride or die. And I watched this thing go all the way down, and I thought, oh man, here's a loss to start Monday. And of course, no one likes to lose, but it is part of the business. But the second my stop loss goes here, and I know price is not hitting it now because it's starting to rebound higher, right? I can now really start to have more confidence that price is going to target this. So I don't want 1.36. I need at least 2 hours. So if I move this higher, what I'm trying to do is I'm trying to align the drawn liquidity with my TP. Ideally, I like to try to get out before the drawn liquidity itself is tagged. But in this situation, this is where 2R would have been. So if I just show you what ends up happening next, and I'm just going to toggle this. Actually, I'll keep that on. Is there a way I can make this a little bit? A little more transparent, is it?
Yeah, so you go to session highlighting right
Ah,
underneath the
right here.
auto session, and you can
This one here?
drag that lower. Yeah, you can just drag that lower or turn it off. It's up to you for the session highlighting.
Okay, perfect. I don't mind having it. Just a little bit darker. All right, let's go one more. Okay, so if we let this play out now, what's interesting too is like, you see how price just barely misses London high? This is what I'm talking about with like, I like to take profit before the draw liquidity because of something like this. Now, there's no way of telling if this is going higher, of course, no one knows. You just, reading the price action as it plays out and you know where it could go. But a lot of times when I'm setting up my trade, I like to exit before because this might have actually just rolled right over, right? Some days this actually does just roll right over in the front runs for whatever reason. Maybe there's news, maybe Trump puts a tweet out, who knows, right? But point of the story is it validates some of my opinions of taking that profit earlier off the table. And you can see some people did here, right? This is a great example of that. However, for me, I was ride or dying this thing and I let it play out. And by the time price got up to the Asia high, it's about here. I pretty much, I was so exhausted from this trade. I'm not going to lie. I think seeing all this drawdown took a toll on me, to be honest with you. And, we're talking like well over an hour and a half of trading, like monitoring this thing. I just thought, I don't want to be greedy here. Even if price goes higher, like I just don't want to give anything back at this point. So my ride or die kind of changed. I did interfere with this a little bit, but profit's still profit. It is what it is. But it did give me confidence knowing that if I just stuck to my guns, there's a perfect and clean 2 hour right there, right? And sure enough, what ends up happening, I think price goes, did it go even higher or did it turn around? I can't remember. And there's lunchtime. So it did go a little bit higher. I think it did end up reversing after that, but I wanted to just walk everybody through how I put this trade together yesterday because I did share it to Twitter, and the process is extremely mechanical. The main component, however, which is all right, let me rephrase. The single discretionary part about this whole thing is understanding the bias. Because like if I get the bias wrong, then I'm not looking for longs, I'm looking for shorts, and then I'm stopped out, right? So the key to this is the foundation, which is the foundation being understanding bias, external range liquidity to internal range liquidity, or the other way around. So that was yesterday's setup. Okay. Now today's setup, like I said, I had a bad start to my morning today, and I made a mistake with my bias, and I'll show you why. And it happens, but there was like a super slight H4 bearish FEG. I don't even know why I considered it, to be honest with you, but you could see it right there, right? It was right there. For some reason, I thought it was going to reverse from there, but that went and started breaking some rules because we're inside of an we're inside of an H4 internal range liquidity. I'm looking for a bias, meaning I want it to go from internal to external. This is my target, not here. So I should have maintained a bullish bias. However, for some reason, I was like, okay, maybe I should be bearish. But if we identify where we are, I can show you what ends up happening today because it was the same thing. Same setup. It still played out. There's actually two setups that formed. So once again, this is today, right? So here's Monday at Asia Open, and then right about here is where we are at London, or sorry, New York session open. Okay, so let me just remark this back on the screen. Okay, there we go. Okay, so I'm targeting, I should be targeting this still, regardless. We have not hit that target yet. And for some reason, like I said, I decided to trade against the bias, which is silly. Okay, and then if we go to 9:30 open, which is basically right here. Okay, this is, oh, sorry, 9:30 is right here. Okay, so at 9:30, this is the setup I should have taken, okay? So at 9:30, just like yesterday, price doesn't sweep the low first, right? And we also have London low down here, and we have Asia low down here, okay? So price went higher first, but then at 9:45, you get this wicked candle that just spikes liquidity, misses the low here, but it still swipes that 50-minute liquidity. If I go to the hourly now, I'm just going to turn this off for 2 seconds, just so we can put up the chart for a sec and see what we're dealing with. Okay, so here we go. Right, here's the liquidity run. Right, price goes this way. Now it is technically aligning with a long bias. We've done the same thing we did yesterday. It swept 15-minute liquidity. So the next part to this then is the execution trigger. Lower time frame, sure. Is it going to be a change of state delivery? Well, if I'm looking at this chart, the change of state delivery technically is way up here, right? So I really don't want to be entering the trade way up here. I want to be entering it lower. So change of state delivery is out of the picture. IFEG, okay. Is there an IFEG? Let's turn on the indicator. Boom. See, right here. Perfectly aligns it for us. How you want to enter that is entirely up to you. If it's on the actual order block here or whatever it's called, or if it's actually on the IFEG. I mean, it's so close. But for me, in this situation, I'd be entering right off the IFEG based off of how my checklist goes. And my stop loss would typically be at the bottom, and then my TP would be somewhere at the top, right? So the second price breaks above this IFEG, this would technically be the IFEG entry. But before we do that, I have to ensure that there's SSMT. Okay, so once again, same concept. Pull up the inlaid fractals for YM and for ES. Okay, so in this situation, I'm looking for micro quarter SMT to start. Like ideally, that is what I'd like to see. More so than seeing the 90-minute one. Oh, geez, it keeps doing that for some reason. Let's go back to this. Okay, there we go. So if I'm comparing ES, which is up the top, and YM at the bottom to NQ, we have that sweep here. I'm looking for micro quarter SMT, and sure enough, we do have it because right here, NQ is making a lower low, and in the process of that happening, YM is making a higher low. So there's your SMT. Now, ES is actually following NQ at this point, okay? There's also, like, since this is here, I don't have to worry about the 90-minute SSMT, even though there was some. Because you can see NQ from here to here is a lower low. From here to about here is a higher low, right? But I don't need to worry about that because my primary focus is the micro SSMT. So sure enough, I get that with YM. Perfect. Okay, so that part's checked off the box. Or that box is checked off, excuse me. And I can now enter based off of my lower time frame trigger, which is, in this situation, it's going to be an IFEG. Now, one thing we always start seeing, like I said before, is like we're all staring at the same stuff. How we decide to enter, how we interpret the data is going to be different across the board. Where you put your stop loss is going to differ, right? Like, so in this situation, if I was using the stop loss way at the bottom here, remember, you got to look at the draw liquidity, right? So let's turn the LD indicator back on. So Asia high is here. Looks like London high is about here. And in terms of the trade setup, price has already tapped those entries. So like those levels. So I can't be looking at those levels now as my swing point. I have to start using like common sense. I have to start using market structure. Sure, there's a New York PM high from yesterday that's here. That's true. But what I would prefer to do is just, like I said, use a clean chart and just use basic market structure and just understand where price is. So if I'm looking at where price could go on the 50-minute, I know that there is a FBG right here. That is liquidity. Price likes to rebalance imbalances. So if I just mark out a line like this, and I just say draw liquidity, I go back here to my 1-minute time frame, I can now start to say, okay, well, if this is where I want to take profit, what does that look like in terms of the stop loss placement? Like, where does it put that? So what that means is, like, my stop loss would be about here. And it's right below the 50-minute swing point. So that's actually pretty good because price already swept there. So this should be protected, and this is a good place to take profit. And this is kind of how I put this whole thing together when I was looking at this in review, because I had made mistakes. And I was trading bearish like around here when I should have been bullish. But this is how I should have set it up and how I like mechanically put things together typically when I have the bias right. In this situation, like I said, I had the bias wrong for some reason. I don't know. Like I said, I think it's because of the routine and the mindset. But mechanically speaking, the way I traded, it appeared again, and it was exactly like it did yesterday. So once again, H4 bullish FEG, 15-minute bullish ERL gets swept. After 9:30 open, we get the liquidity sweep right here, which is what I need to have. I don't like just trading like straight moves down with no lower time liquidity sweeps. Like, I need to see a sweep. So I do get that here. So, and the reason that happens and why I need it is because I want to confirm that there is a presence of a change in state delivery. Because it's so high, it's acceptable to take an IFEG entry for me. I like to be versatile and flexible. It's not just like I'm only trading unicorns, or I'm only trading IFEGs, or I'm only trading OTE, or I'm only trading order blocks or whatever, right? So sorry, I'm just reading Q Trades' comment. Or maybe a Mac thing. I'm not sure. It could be the way it's. I have no idea, man. I think it's because I'm sharing the whole window. Maybe I'm not just sharing the chart itself. Like, I shared the whole window. So, oh, okay. Just to come back to this quickly, just to finish my thought. This is where I would have entered. This is where I would have exit, and this is how I would have measured the stop loss. Now, yesterday, that setup, it went deep, right? So when that happened, even though I had planned to take TP at that lower London high, I ended up just intervening. Yeah, Flux, I do have an ultra wide, man. I think it's like 34-inch. It's probably wide. So if does that help you? That probably might help a little better. But once again, because okay, I'm gonna have to check all that another time then, probably for the next time. I'll just quickly go through this just because we've already run for almost 2 hours. So you probably mean this button, right?
I was saying specifically more for the people in the audience. They
Perfect.
can pop it out, but definitely it looks good on the view for me. So
Okay, perfect. I just hit full screen just so everybody can see it. But once again, in this situation, because price didn't actually have that deep retracement, this shallower stop loss works out perfect to take the 2R, right? So this is kind of how I put these trades together. And once again, if we look at the manipulation window right here, 923 to 1008, and then there's also another one here too, right? You have a 1053 to 1138. There's a lunchtime one. So take a look at this, the day quarterly theory indicator. Super cool. Just to show you my settings, it's just 90 minutes and microcycle. That's all I use. Everything else is pretty much aesthetic at that point that you can adjust. We talked about the dodgy indicator, which is a super powerful indicator if you're trading IFEGs and you're kind of unsure like which one is the one to use or like how to go about trading them. Highly recommend to put this indicator on and play around with the settings. There's a ton of alerts that can be fired off on this thing, so just be mindful of that because it could overwhelm you if you're not comfortable with that type of thing. But such a cool indicator, in my opinion, and one that really helped me. And yeah, that's basically yesterday and today in terms of the session trading, like what I would have done to what I should have done today and what I did yesterday. So the whole point is like repeating the things that work, right? And I know that my system works because I have all the data to show that it works. And every day I show up live, even if I screw up and I review like what I did, I see that the setup still worked. It's just maybe I made a like a technical error, which is what I did today. I made a technical error, and it happens. But my risk is managed, and I move on. Right? There's another day, or there's another manipulation window I can trade if I wanted to, and see if everything lines up. And if it does, it does, and if it doesn't, it doesn't. Right? So like, I mean, there's one right here from 1353. Like, I don't even know. Like, this. Let's take a look at that for a sec. Just gonna delete this for a second. That. I'm no longer doing that. This out. All right, so here's 1348. Yeah, so we know that there was a H4 FEG. We know that there's a 15-minute sweep right here. Perfect. And the only other pieces of criteria I need typically are like to have a change state of delivery confirmed, which means I need a lower time for liquidity sweep, which we get right here. Okay. Having the dodgy indicator on shows me that there is a setup here, and look at that. Like, that's pretty awesome that this indicator like points this out. This is what I really loved about it when I first put it on was aligning it with market structure and being able to kind of pinpoint like clear IFVGs versus ones that were not so clear perhaps. It could be because of size. So like this would be valid per that size being small. And then once again, we have that manipulation window, and I like to look for SSMT. So if I put on the ES fractal, I can then start seeing if there was SSMT, right? So if I'm first looking for micro SSMT, there's none from here to this quarter, right? Even from Q4 over here to this quarter, there's nothing there. Even though price goes lower, ES is following it. I wonder if YM did the same thing. Typically, YM likes to not do the same thing. Sure enough, it looks like it did the same thing. So what I can then start doing is this. So we know this was a key 15-minute swing point. This is the second thing I do is if I don't see the micro side of things, I look for the 90-minute cycles. So I know that this is the low that got swept. So maybe there's SMT or SSMT between this swing low and this swing low because NQ is making a lower low. And sure enough, you can see that YM had a low here and then made a higher low. So there's clearly SSMT down here at the bottom, which forms perfectly inside of that manipulation window, which is why I love them. And then beyond that, like I said, I'm looking for my lower time frame entry function, right? Even ES actually had a higher low there too, which is perfect. So that's pretty amazing to see. Both of them were aligned. So that's a very, very valid SSMT in my opinion when you get it from both assets. There's our sweep. Here is the change state delivery right here. So like for me, I like to enter off of the change state delivery. Typically, the reason being is just even though I know it's up here and it's confirmed in the sense of its existence at this point, if price had dipped here, I might not enter here, and I want a little bit more confirmation before I would enter. So like that's why I usually like to wait for that change state delivery to get like fully confirmed. So that would be like up here, right? So once I get that break out of that level, I can then set my stop loss and my entry. My entry is pretty obvious, which is on the line. How is it? Okay, Amsterdam's asking, how is it an SSMT such that, are you sure? Well, to my knowledge of what I learned off of, another trader who was basically teaching this thing, I'm literally using a 90-minute quarter here to determine the SSMT. There's clear time quarter ranges here. So that's how I've been doing it. It's been working perfectly for me. If I'm doing it like something incorrectly for whatever technical method there is, my bad. But this is what makes sense to me and how it's been working. Yeah, 90 minutes, brother. No fun. So yeah, change state deliveries right here. The next part, of course, once again, is the drawn liquidity. And here's our lunchtime high. I love this indicator, actually, Josh. This is sick, man. Look at that. Put it right up there for me. Perfect.
I'm glad you
Amazing.
like it.
Yeah, man.
I actually think that it's a really good time saving tool. And again, if you don't want to use just like the standard like one setup for life stuff, you could always set your custom sessions. Like you seem like you're a fan of the Asia session and the London session, and you can just go to the indicator, toggle custom sessions, and put whatever you want there. So it's a very versatile tool, like you said. So definitely look to explore it. If you have any questions, you know I'm here for you. So.
Appreciate that, man. Yeah, I noticed poison on here. I know there was a previous live stream where it was, I think, probably multiple, but I mean, this dude is such an amazing trader, man. It takes, I mean, he's like a professor. He's like a professor, man. Like you got to bring like your notebook and make sure you're taking notes because there's so much knowledge that guy's got to drop. So shout out to Poison. Yeah, so in this setup, once again, I know my entries here. If I'm putting my stop loss at the bottom here just to stay protected, and I know that this is my target, right? There's LRLR up here. Like, I can basically be, oops. I can measure out 2R, which is what I want, right? So if I know that this is basically the draw liquidity and it's only getting me a 1.6, then I need to adjust this, right? So even at something like that is better than keeping it at the bottom. And then sure enough, we do get price running, just barely missing the high there. So like, for me, I wouldn't wait to take TP at the top here. Like I would have preferred to have it probably a little lower. It could have been somewhere around here maybe, like taking this high or even like this high. But for that to happen, then you got to really tighten up your stop loss. And I don't know if I would have done that personally. So I think I probably would have aimed for something like around here. That allows me to just get a little bit more wiggle room on my stop loss, and ultimately that same level gets tagged right here, right? And like I said, you don't have to aim for perfection depending on how you trade. Like for me, I'm trading a 2R setup, so like I'm not working on skimming out profit as price goes higher, right? Like keeping runners. That's a completely different way to trade, and a lot of traders do that. So if you are doing something like that, then when you hit that first TP, which is probably about here, right? You're looking at swing points. And there's one right here. There's a minor one here, internal. There's an external one here. So like you'd be taking profit here. You'd be taking profit here. Your stop loss would be at break even. What I mean by all this is that like there's so much more management that's involved on a technical level that you really have to be like on the ball. Otherwise, like you could make a big mistake and screw a lot of things up for yourself. So if you are going to trade that way, just make sure you understand what you're doing. For someone like myself, I prefer to be a little bit more like mechanical about it. Like I just want to be in and out. I have funded accounts. Like I don't need to. Like for me, I don't need to aim for that perfection. Like I showed you here. Like I would have just aimed for taking out one of these two and having 2R, and hopefully this thing doesn't retrace on me. And sure enough, it wouldn't have. But once again, like I mechanically showed you how I would have put this trade setup together, how I utilize the manipulation window between micro quarter 2, micro quarter 3, SSMT here between the 90-minute quarterly cycles. And we talked about how to put the ES and the YM fractals on your actual screen to make your life way simpler and less cluttered because you can just toggle it on and off, right? You don't have that additional screen, which to me is amazing. So if that's something you want to do, like go for it. I'd love to hear your experience with it too after you've done it. So that'd be amazing. Does anyone have any questions or anything at this point? Because that's pretty much my system. Not about 2 hours. I know I haven't talked about Bitcoin or anything, but I'll take a quick pause here, see where everyone's at.
Absolute great stream. I know we don't want to talk about Bitcoin as much, but we did mention on the last stream you were here that there's pretty much typically two stages of reaccumulation, right? And we saw that on the weekly. They popped their head up against the that weekly high and kind of been selling off since. So
Yep.
we'll see. We will see. You know, I did say that I wanted to do a full MMXM review on Ethereum once it hit that all-time high, and we did get that. So probably be looking out for that. And if I guess everybody in the chat is still with us, let me know if you would like that. We did one for Bitcoin when it did make that all-time high. So if you did enjoy that that MMXM review, then let me know in the chat and general chat. I look forward to doing that soon.
Yeah, in my previous stream with you guys, like I talked about the 4-year cycle theory, and
Oh yeah.
talked about how like altcoins have severely underperformed, at least below my expectations of what I have experienced in the previous cycles. But if like this cycle theory holds up still, like there's a top coming, and it's probably going to be a blow off top because it's running out of time. I don't know how like there's not enough time left to fit this window, but I know a lot of people are throwing out. I've seen a lot of people throw out really high numbers, and I'm not one to predict anything. That's not the game I play. I just try to like use techniques that I would use in futures trading to apply across the board with crypto. So if I'm looking at this chart, I'll go back to it on the actual screen. Um, if I'm running like standard divs from down here, which I would typically have done because like you have a clear breaker block here, right? Change state delivery, whatever you want to call it, is all here. I would just be measuring swing point to swing point, and what's interesting is like -2 to -2.5 is a very key area for profit taking, right? And sure enough, this is where we're getting profit taking right here. So if, in my opinion, if this like ERL, which is getting flipped, it looks like it's just being flipped into support, can get like supported properly and we could get a bounce back higher, like I'd be looking right up here, right at these two standard divs. And while there's a lot of people I've heard, we see crazy numbers. People are like $500,000, $1 million. I've been more on the lower side of things. And if I'm using just technical shit, like this is kind of where my mind is at. So like in between like 153 and like 163. So basically, if I see price over 150K on Bitcoin, like I have, red flags going up that I need to start taking profit. And then of course I'm going to analyze that with time. So like with time, I'm analyzing around end of October to like very early November around here. And I know typically with altcoins, sometimes they can run like a little bit longer. So my scale out is going to be basically from October to November. But it's been a very, very weird cycle. So Raphael saying very important area. So, okay, cool. So another amazing trader that I'm sharing some similar thoughts with, which is amazing. Josh, looks like you're agreeing too.
I don't have any let's call it stronghold opinion other than the fact of saying that I believe that time is kind of running out the same way that you're looking at it. But yeah, from a structure standpoint, I definitely think the accumulation can be having its departure soon. So when I saw Ethereum kind of had its all-time high and peaked its head above it, that was kind of enough for me to say that, Bitcoin will likely just hold in its range. And if it starts breaking down, then it'll start breaking down. There's not really much else I could say with that. So Ethereum was the
Yeah.
last one to poke its head, and it poked its head. And if there's no real FOMO above 5K on Ethereum, then I mean, no one wants to be a party pooper, but the show may be over. you know, we'll
It
see.
very well
I'm
might.
not. I'm not a bear, though. I want that to be known. It's very hard to be a perma bear on any like very ultra like bullish assets in the long term. It's like someone trying to be bearish on the Nasdaq. Like it's over time they just go up, right? So it's like obviously there's going to be highs and lows, but it's very difficult for me to be a bear on like perma bull assets. So there's just highs and lows. There's no other way to say it. Markets will go up and down.
Yeah, 100%. I mean, like if you just zoom out on Bitcoin, though, it's just like gold or Nasdaq. It's just, yeah, it goes up and down. There's dips, but like the
Hmm.
trajectory is just up. So it makes a lot of sense right now to just buy those really, really bad dips, right? Like when we get those bear cycle lows, which typically form a year after the actual high is put in.
Mm-hmm.
And I mean, this indicators is showing like already lays out the 4 year cycle. Like these are the Bitcoin halvings. These are the basically the end of the bull cycle is like timed out here. And I mean, you can see it's like this is the first one. So a little less data to work with, but over here, 2017 blow off top. If anyone knows about pi cycle highs and lows, like that's been pretty damn accurate too. So I have that on watch, but it's so far away from crossing, which I'm just like super confused to be honest with you, because like the time is not like aligning with the other metric type of indicators. So
Yeah.
I mean, even using like a social presence indicator, which would be like using the Coinbase app, looking at the Apple Store, like what rank is it at? Because earlier this year, when we had this rally right here, if you look at the Coinbase app, I don't know if you can ever see the history of it, but like if you look at the Coinbase app, like it was like I think sub 50, if not in the top 10. Like it was really like in the top levels, which usually means retail is all inside there, and um, that's that sentiment factor. But right now we're here, and I believe the Coinbase app is like ranked over 300th place right now, which is nowhere near euphoria levels, right? So either the market makers are pulling a fast one on us, and they're gonna like get people to sell. Like that's been a big thing for them is like getting a lot of OGs to sell off on these dips, thinking that the rally's over. I've seen it because it happened here. So many
Mm-hmm.
people sold off here. Like so many OGs, like accounts, people I was following who were like perma bulls were all like throwing in the towel here. And then like, look, price just went up. And like, I'm
Yeah.
starting to see it again. So I'm like, hey, I'm just going to keep following the time cycle. It has not failed once. It has not failed once. And until it starts to crack, then I'll stop adhering to it per se, but it
Don't want
hasn't
to fix
happened
what's
yet.
broken, right?
Exactly. And I mean, right now, this looks like a beautiful flip. Like, if you're just trading support and resistance, like, this is just a beautiful flip. Like, we would have been trading this in futures as like an order block flip, right? Like,
Well, we will see. We will definitely see. I know
yeah,
that we kind of mentioned the Ethereum Bitcoin pairing. I don't know if you've seen that one, but that's been kind of my main focus ever since Picasso went on stream, and that thing's just
yes.
been on an absolute ripper. The other way around, ETH
Sorry,
BTC.
whoops. Yeah, I typed it in wrong.
You're good. You're
Yeah,
good. No, this
Picasso's the
this has
man.
been on an absolute ripper. I mean, we were talking about this on stream at 0.027, 0.026, and yeah, this
Yeah,
is a
I'm
big
watching it.
indication for me too.
And we just hit the -1 standard div, just based off how I'm measuring it. But I mean, pretty clear weekly swing low swept. I mean, I like to use a lot of the same principles I use on the lower time frame, like you've seen me use on the 1 minute time frame. I use it on the weekly too because it's all fractal. And I got the sweep. Look at that. Change singularity respected, IFVG respected. Like now we're at the -1 standard div. And as we know, -2 to -2.5 is usually a pretty solid target. If we start getting acceptance over that, we can start looking for here. So that's kind of what I'm waiting for, just to see how we work out of this into here. But I think this is. Were you saying you think this is going to be the top potentially, or is that what
I'm
you're
just
saying?
saying for Ethereum, like I want to really see the FOMO above 5K, and I think
Ah,
that Bitcoin will kind of get jealous from that if that happens. But if it doesn't happen, then again, Bitcoin's just gonna range or drift lower. So, but yeah, the
yeah.
Ethereum price move has just been an absolute ripper, man. Like it's
Mhm.
been, I've been impressed to see what it is. But after it kind of hit all time highs, you kind of have to calm down the expectations naturally because that's when everybody else is, let's call it, really bullish, and
Right.
kind of had a pretty aggressive sweep already lower. um I don't know if again anybody is familiar with this, but it's a pretty clear thing that you can see in your charts. But the moment you rate any type of all-time high, looking at basically, let's say, an all-time high on a monthly or a weekly, if you just see any, basically the last daily swing low after piercing an all-time high, that's like a clear liquidity target. And that pretty much happened on Ethereum to create somewhat of its range. And, more or less after that happens, you kind of just have to wait and see what's going on. So, but yeah, we will definitely have another stream to talk about the advancements of this, but it's
Sweet.
been very fun to watch. Let's just say it like that.
100%. 100%, man. So yeah, let's see how the end of the year goes. And yeah,
Absolutely.
thanks for having me today, buddy.
It's always a pleasure. It's always a pleasure. If anybody else has any questions, you could always ask me in the general chat, but this has been an amazing stream. I think we've been going on basically almost like 2 hours and 10 minutes. I appreciate White Chocolate for being here, helping us out. Flux, shout out to you and everyone else that's part of the 2 Degrees community. We really, really appreciate you guys. And I will definitely be loving to see you in the September live stream schedule. I did post that recently, so definitely keep an eye about that. Kira, and we will talk soon. If you have anything else for the audience, though, please go ahead.
Yeah, I mean, well, besides that, thank you. And just a quick shout out to you. Thanks for having me, for having me. Ash Trades, White Chocolate, Day Trading Realtor, who is the OSOC uncle. Fellow trader of mine who also has his own YouTube. His name is Storm Trades. Highly recommend you guys check him out. He's in Unicorn University with me. And Matt, he's a solid trader. Eat More Chicken, who I think everybody knows. He's goated. And then yeah, I trade inside Unicorn University every day. Live stream there twice a week. And yeah, if you want to rap with me, you can DM me or hit me up on those social media links, and we can chat. Other than that, Josh, thanks again for having me, man. I really, really appreciate it, and hope you have a good day, man.
Thanks so much. I wish everybody else a great rest of their day as well. Take it easy, and we will talk with you guys soon. Bye bye now.